The market moves higher, then lower, then higher. So what exactly is going on? This is Invest with Jacob. Okay, guys, so in last week's video, we talked about the fact that we were heading into the end of the week, and I was a little bit skeptical of the move down because the bulls like to close the end of months and end of weeks at the highs. They couldn't quite get back to the highs, but they gave us a monster squeeze into the weekend, then moved down on Monday and back up again. So what in the world is going on? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, I do want to go over some things that are really important about my live room and about what some of you think on this channel. Just because I talk about paths doesn't mean we are trading them a certain way. Yes, I am overall in a short bias, and even my trading is in a short bias, but that doesn't mean I'm not trading against that short all the time. In fact, I have longer term shorts that I use hedges against, and on Friday, I told my room, as you can see, if they get back over 52.42, then the bulls have juice to the upside to 5300 to 5330 to 5400, and that's exactly what we saw. They broke 52.42 and immediately squeezed, and a monster squeeze up to 5300, and this morning, or yesterday morning, we cashed that out for over $8. That is a hedge that pays for our short trade that's much longer dated, many months out from now. So we have time on our shorts to come back down. Meanwhile, we're paying for our shorts with well-timed hedges. This is a strategy we employ, one of many, and why it's so helpful to be in my main room. If you'd like to be part of a winning team, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. If you've been following the channel at all, you know that I'm looking at this move up from April as either a ending diagonal, a large ending diagonal, with this being wave 5 of that ending diagonal, or the potential for this to be an expanded B wave. In both cases, you're looking for corrective waves, and that usually means a lot of chop, and that's exactly what we're seeing. Off of the lows down here, there was a lot of chop. Up here, there is a lot of chop, and this is typical of ending diagonals as well as expanded B waves because they are corrective structures, and there is a battle happening here for the all-time highs. There's a battle happening for the top of the market, and this is how beginning and ending, leading and ending diagonals work. So, as I said in the intro, I told my room on Friday, back over 52.42. Why 52.42? Well, it was a huge level here. They held it and then shot higher, came back to it, spiked it lower, and if they came back and got back over this choppy resistance area, then it was very likely they were going to go back to 5300. We got in down here, cashed out here for almost a $5 profit, and then after we cashed out here, once we came back down here, we reloaded our hedge, and that hedge is now doing well, again, paying for our short positions. So we will have a free short position if this market goes to all-time highs, and we have plenty of time on those shorts to play out. So we're employing a long-term shorter position and paying for it with shorter-term long positions. This allows us to make money even if the market doesn't come back to our strike price, because once the trade is paid for, it only has to come down. Well, any value in the short trade is all profit. So if it just even comes down for a double bottom here, that's a huge win. And if it does what we think it's going to do and breaks down, then these are wins that you just don't get to see all the time. And this is a strategy we employ, like I talked about, and something that we teach and something that I go over and something that's really valuable to know how to trade this market, because it is whipsaw. It is hard to be in a singular position. And if you don't play short-term trends, then you're likely to get run over. So we're playing the short-term trend for profit and the longer-term reversal for trades that you just don't get to see all the time. The COVID lows, we did this there. We played this off of the COVID lows. We were looking for a big spike back up if you've been watching this channel for a few years. And that same exact strategy netted us trade wins that you just don't get to see. And I think we have the opportunity, whether it plays out or not, for that same thing. And if I can do it for zero risk by playing short-term hedges, that's what we're going to do. So that's what we did. Right now, it's pretty simple. If we're over 52.95, the bulls are in control. There is potential to come back down and still be bullish. And this is the whole problem with diagonal markets, right? And so what we have here is we have a couple potentials. Can it be bearish? Absolutely. This can still be A, B, and a breakdown in C that breaks 5,200. Remember, I said a direct break of 5,200 would be bad for the bulls. Where did they hold? Basically 5,200, and then shot it back up like a lightning bolt. So 5,200, the bulls know it's important. They held it. So yes, can this be bearish and be an ABC down to start a corrective move to the downside? Yes, that is possible. Is that where I think we're going? No, I've said for a while now, I still think we need to get to 5,400. I still think that's going to be the high. And this still has the potential to be the expanded B wave. I think it is. But to do that, it really needs another high. It can do it from here, but it'd be a diagonal. And again, diagonal and diagonal and diagonal. I just don't trust it. So all of the overlap here has made it a little bit messy. So I really simplified it in my room today. I said over 40 or 52.95, the bulls are in full control of this market. Under 52.42, and the bears take back control because it's very likely we break that level. Then we'll break this level as well. So overall, what are we looking at? And this is the reason I kept it simple, because there's a few different ways this can play out. Ultimately, you're looking at an ABC. Okay, so either we already have A done and B done, and they're starting C up towards 5,400, or we're in a leg of A where this is A, B, C, then B and C, like that. Or it's bearish, like I said, and it's an ABC to the downside where you go A, B, C. So that's why we keep it simple right now. You have three paths, okay? Two of them are bullish, where as long as we're above 52.42, we're looking at 5,400. And one of them is bearish, where if we break 52.42, we're looking more down here in the 51.50 area next. To this high off of this A wave would be our next level of support. And that would be a strong indication that the bears are trying to put in a top here of an ending diagonal. This would be 5 of that ending diagonal, so we'd look for a corrective move down from there. And that's what we would look for. So it's a little bit complex when you get down into the weeds of the wave counts, but to keep it super simple, above 52.42, above 52.95, the bulls are in control. Below 52.42, the bears are in control. In between is neutral. I don't have an opinion of the market if it's doing this right here. Okay, so below 52.42, bears, above 52.95, bulls, and that keeps it really simple overall. Over on the NASDAQ, okay, we talked about the NASDAQ also being a little bit more bullish than the ES. They did accelerate down and break the 18,400 level we've been talking about, and then they spiked right back through it. So they didn't give it any chance to backtest it and come down. They spiked right back through it, which still remains bullish, which means this ABC to the upside is the more likely scenario. Back above 18,800, and the bulls are in control on the NASDAQ. And back below this low from yesterday, this 18,435 area, back below that, and the bears are in control, and we likely come down and break this level and head down toward the 17.9 area next. So yesterday's low is the key level for the bears to break, 18,435. That would be the red ABC that you see on the chart. We're off of the high. You have an ABC for A, B, and C like so. If that's going to happen, they have to break yesterday's low, obviously. That puts the bears in the driver's seat. And then back above 18,800, and the bulls are firmly in the driver's seat, looking to head back toward the 19,150 level we've been talking about overall on the NASDAQ. So there's a few different paths. This is why diagonals and ending diagonals and corrective waves are so tough, because they can have so many alternate paths because they don't have the rules that an impulsive wave has. So in order to keep it super simple, we're going to go with key levels, 18,800 to the upside, and yesterday's low at that 18,435 level to the downside. Guys, if you like the information I put out in these videos and you want much more in-depth, real-time updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it, become part of the trading team, interact with the crew, interact with PT and I. Make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material, our Elliott Wave for Beginners and our Elliott Wave Advanced course. In our advanced course, we go over the complex patterns that we're looking at right now, such as these ending diagonals, leading diagonals, double and triple threes, advanced fib levels, all of the complex patterns that really make it hard to understand the market. We go over them. And when we go over them, first thing we do is draw them out so you understand what they look like. And as we're drawing them out, we then add the fib levels to the chart so that you can see where the fibs hit, how they're supposed to look, what they're supposed to look like on the chart, because in a perfect world, obviously you would want it to look exactly like we draw it out. But then we go to the chart because it's not a perfect world, and we want you to see what this looks like on a chart, how it plays out, where the variations are, understand when they are failing, when they are working. You can see our double threes here. And make sure that you understand what's going on in these complex patterns. As you can see on the screen, people are loving this course, and it's really helping them understand this mess that we're seeing. But if this is too complex, or you're just getting started with Elliott Wave, I completely understand. That's why we have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand a market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. And this is why Elliott knew that the news cycles were worthless long ago. He knew that the key levels mattered, which I gave you today, and what happens when those key levels held and what happens when they break. This gives you a huge advantage over the rest of the market. Now, this course is 25 videos in 3 sections where I go through your introduction, where we go over the expectations, your mindset and emotion, the KISS method, and why this works. We go over the chart setup and tools, every tool you need with Elliott Wave, how to use it and why we use it, and then the Elliott Wave for Beginners area. This is all of the waves, how to measure them, how to understand their targets, their key levels, the corrective depth theory, the theory of alternation, everything you need to know about Elliott Wave Theory to understand the market in a way that makes sense. Now, the cool thing about both of these courses is if you want to get them at a discount, you can get our bundle package and get both courses at once. It essentially makes this a $30 course. It's $37 cheaper by getting the bundle. But if you don't want to pay anything at all, you can simply become a monthly member, as all of our educational material is included in our monthly rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the trading material you just saw. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's throne room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method that just crushes it, and his advanced reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price. He gets you big multiples on your money, and it's how he structures those trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. Market grinded back up. We have 2 key levels, 52.95 above that, which they are right now. The bulls are in control. Below 52.42, and the bears take back control, and we very likely look lower in a more direct way. As long as we're above 52.95 and really above 52.42, I would expect that 5400 area. But below 52.42, and that can be a break of last week's low, which would be an indication that a top may be in. Over on the NASDAQ, 2 key levels, 18,800, and yesterday's low around that 18,435 area. Break above 18.8, and the bulls are firmly in control, and we're looking toward that 19,150 area. Below yesterday's low at the 18,435 level, and the bears take back control, looking down toward the 17,900 area next. Guys, that is your market update for today. I'll talk to you tomorrow.